here. Anyone have any questions from the previous trade breakdown that we did? Everything was simple?
Yeah.
Okay, cool. All right, so let's get into some news here. Let's get into some fundamentals first, and then we're going to get into technical analysis. We're actually going to do 3 pairs today. Usually we do GJ and gold, but we're going to get into a little bit of EU as well for those who want to expand the currencies that they trade. So let's start out with the fundamentals. We have some geopolitical tensions going on, and this is what we've been talking about when it comes to gold. So anything related to geopolitics and trader or investor uncertainty, it directly reflects into gold. And we kind of saw how yesterday's fundamentals were affecting the levels that we're sitting at for gold. And so this is kind of just contributing to it. So now all we're doing is using yesterday's fundamentals plus the fundamentals that we have today. And we're building upon that. It's like, again, it's pieces to a puzzle, right? So you're kind of putting all that together to understand exactly when to take that trade of gold. For example, if you're trading gold, then exactly when to take that trade when the technical and the fundamental and the market sentiment align. So right now we're putting the pieces together for that puzzle, and then we're waiting for that opportunity from the fundamental side and from the technical side, and then taking those optimal trades. So what we have going on here is we know that EU and China have this trade deal, and in December, they were able to secure a major investment deal between the two, which took about 7 years of negotiations. But now what we're starting to see is that the EU is joining the US in sanctions, tit for tat sanctions is what they call it, with Beijing. And then you also have Italy coming in, and they're trying to block the planned acquisitions by Chinese companies. You also have Germany stepping in, the EU's executive branch and Germany coming together and each formulating their own legislation that's making it harder for Chinese entities to invest. So that's what we have right now. And then along the way, as we go further down, all this different fundamentals that we've been seeing, all that kind of comes to this baseline conclusion that the Europeans are strengthening their stance on Beijing, and they're kind of agreeing with the US in a way. So we know that there were tensions between the US and China. So they're kind of agreeing, and they're starting to see like this argument that the US had already put out that China was, for example, cheating, quote unquote, cheating in their exports, making it super cheap, and ultimately cutting down on, like, for example, US union jobs and things like that. So there are like a couple of different arguments, but now you're seeing Europe kind of join hands with the US in the same exact thing and hardening their stance against China. And there's a larger sentiment that if the German Greens Party is able to secure a significant role in the German government after September's election, then there's going to be a prospect of a more China skeptic chill, is what they call it. So overall, there's a lot more details in this article, but overall what we see happening is that the European and the Chinese relationship is on this downward trajectory. So that is feeding into that geopolitical issues that we are starting to see that are picking up here again. And then let's go. Any questions on this document, on this article at all before we move on?
No, nothing.
Okay, cool. So now what we're starting to see is you have that uncertainty from the political side, but now we're kind of shifting into when you look at individual economies. If you look at EU, the US, the UK, what we're starting to see is a little bit of more optimism. So we know that the UK is already opening up their economy. They're starting off with May 17th, easing up some more sectors in their economy. And then in June, they're hoping to open up their economy entirely with some precautions, still taking some precautions, right? But we saw UK leading, and then we saw the US talks as well of opening up certain states, opening up certain parts of the economy, all of that. And now we have optimism from the EU where they're planning to ease their restrictions as well. So the European Commission is proposing to ease restrictions on businesses and travel for the fully vaccinated people. And that's bringing in more optimism because that shows that they're slowly moving towards some state of being normal again, quote unquote normal. And Germany, which is Europe's biggest economy, is also following suit by next week. So they're also trying to open up or ease up the restrictions for their fully vaccinated people by next week. And then we have, down here is what I want to address. So what we have is, this is an example of India, and this is the same thing that we saw yesterday as well in our article. But what I'm going to do here is pretty much sum up all three of these articles together. And that is that cases are starting to rise in developing countries. So in India, you have South Africa, you have Brazil, and you have a lot of other developing countries where we're starting to see new variants coming out of. And as we've talked about it before in the past couple of breakdowns and weekly outlooks, is that whenever there's going to be a new variant coming out, there's always going to be some sort of uncertainty and fear that settles in. But what matters more is, how are you going to handle that? How are you going to handle the new variants? Whenever there's any new disease coming out, there's always going to be some new variants of it, right? So what matters is, how do you handle it? And what we saw in yesterday's article was, right here. So what we saw in yesterday's article was that the US and the World Trade Organization, WTO, are coming together, they're collaborating in order to expand access to vaccines for those developing countries who don't have access to vaccines otherwise. They're not able to afford the vaccines, they're unable to secure the necessary amount of supplies for the vaccines, or any other issues that they may be facing. So that's what the US and WTO, they're trying to come together for. They're trying to expand the access to vaccines, and that's how they're planning on trying to control this the new variants that will be coming out time over time, right? So that's the action that they're taking, and we want to see, like, what are other actions that these individual governments are going to take in order to make sure that in their own domestic economy, in their own domestic economy, that they're not going to see an increase in cases again. And if they do see an increase in cases again, how are you going to make sure that your healthcare system does not overheat like it did last year? Make sense?
Yeah.
All right, awesome. And then we have some business news, which is also opening up some more optimism. And that's that the airlines are pushing for a US and UK travel deal by the G7 meeting in June. And explicitly here, it states that safely reopening borders between the US and UK is essential for both of their countries' economic recovery from COVID-19, and the exports between the two countries and tourism have a significant impact on each nation's economy. The UK is actually the US's 7th largest trading partner. It may not seem like a huge deal for a lot of people, but it is pretty much in the top 10 trading partners with the US. So once they do open up this, once they lift up the travel restrictions between the two countries and they start opening up their own economies, and they're able to start trading more, exporting more, and they're able to allow some more tourism, that's obviously going to boost the economy for both of the countries. But this is going to have a much bigger impact on UK's economy. And that's because of the post-Brexit consequences that are settling in that the UK is still trying to deal with, right? So all the businesses that's losing to the EU, because the UK firms have a large database the UK firms have a large database in the EU, and the EU said that, well, if you want to contact your database that's living in the EU, you need to have the EU representative to go contact that customer, and you cannot contact that customer directly, right? And that's an additional cost for the UK firms. So what they did instead is just simply, they said, okay, well, we're not going to be in the UK then, we're going to shift to the EU. So we've seen those businesses moving. We've seen a large amount of money being transferred out of the UK and into the EU. So we're starting to see some more of these post-Brexit consequences settling in. We've seen exports and imports taking a hit, right? Special licensing. We're starting to see non-tariff barriers being put in place. So all these things, but now whenever this trade deal happens between the US and the UK, or this travel deal happens between the two, and they're able to ramp up their exports and tourism and traveling and all of that, that's obviously going to have a much bigger positive impact on the UK's economy. So for pretty much all the currencies that we're looking at right now, whether it's GJ, whether it's EU, whether it's gold, any of those, we can see that clearly we're starting to see some important fundamentals coming out once these currencies or these assets have tapped into some crucial levels, right? Those monthly, weekly levels that we see price sitting at currently for GJ, EU, gold, GU, and whatever it may be. All these currencies, they're sitting at a pretty crucial level right now, right? From a technical perspective. And this is when we see all these fundamentals coming out, and you have consolidation happening from a technical perspective, as we're going to get into. You have consolidation happening because there's like, you know, overshadowing optimism, but then there's also hints of this like market fear and uncertainty settling in. So all we need is pretty much a little bit of more optimism in order to get out of those crucial levels on the monthly time frame, on the weekly time frames, and we want to see like which currency is going to be stronger and things like that. Makes sense so far? Did I lose anyone?
Yeah.
Any questions? Seems like Jen got it down. All right, let's go into the news for this week then. So yesterday we had the Japanese holiday. We also had the Chinese holiday. Same thing today. And we also had the bank holiday and London session. Give me 1 second here. All right. But throughout the week, what we have is a ton of USD news, a ton of Euro news coming out as well. So going into today's London session, what we have is a ton of GBP news coming out about an hour and a half into the market open. And so I would say that as soon as the market opens up, we might catch some volume pre-London session, but as soon as the market opens up, maybe about 30 minutes in, I think the volume's gonna die down a little bit, just because the price or the market's gonna try to price in any news that's coming out. So you have the final manufacturing PMI, we obviously know that's important. You also have the money supply, you have mortgage approvals, and you have net lending to individuals. So all of this pretty much, from mortgage approvals to net lending and money supply, all of these things, the reason why you want to pay attention to that is because that's more on the consumer side, right? So if you increase money supply, for example, then that decreases your purchasing power. Make sense? You're putting more money into the economy. And then mortgage approvals, pretty much the same exact thing. If mortgage approvals increase, then what you're going to see is, for example, like they'll call it different things in like different countries, but things like building permits are going to start increasing too, right? So you want to take a look at, if mortgage approvals increase, then how is the housing industry being affected? If building permits are increasing, then how is construction being affected? Things like that. So those different aspects of that one little part of the economy, right? So these are the things that you want to take a look at, because they're going to tell you what kind of numbers to expect. And then going into New York session, the most important thing that I would personally pay attention to is the economic optimism. It's the economic optimism. You want to take a look at that. And then you have the FOMC members speaking tomorrow as well. And then you have the Japanese bank holiday again, and Chinese bank holiday in the Asian session. So expect a decrease in volume. Going into Wednesday, you have a ton of Euro news coming out. So it's going to be a very fundamental heavy London session going into Wednesday, and then a very fundamental heavy New York session as well, where you have the non-farm employment change coming out, ADP. That's something that you want to watch out for. You want to watch out for anything that's related to jobs number, because on Friday we do have NFP. So these are the type of things that are already going to give you kind of a forecast, a kind of an understanding of what to expect on for NFP on Friday. You have a FOMC member speaking, actually twice. You have the FOMC member speaking in New York session, and then you also have the services PMI coming out. Then on Thursday, so on Wednesday, Asian session, maybe even Thursday, London session, you can kind of start to expect a little bit of consolidation happening or volatility happening and low volume as the market gets closer to the interest rates that will be introduced at 4 a.m. PST, 4 a.m. on Thursday in London session. And another thing that you want to pay attention to is the monetary policy summary and the monetary policy report. These are the things that are going to tell you exactly what is the Bank of England taking a look at. And they're going to kind of, sometimes they'll list out things like, we're looking at employment levels, we're looking at inflation levels, things like that. So throughout the week until the next interest rates come out, those are the factors that you can follow as well and kind of assess what's the economic health and where's the economy headed? Are the interest rates going to be raised? What is pretty much the central bank, what's the central bank's sentiment? And then unemployment claims. So in addition to the non-farm employment change, you have the unemployment claims coming out, and you also have the challenger job cuts. So these are things that are going to get you ready for NFP on Friday. Any questions for fundamentals?
Yeah, can you repeat the money supply part for GBP?
Yeah.
Yeah, this one.
So this is a change in the total quantity of domestic currency in circulation and deposit in banks. So when you have expansionary monetary policies, they increase money supply, and that could be through injecting money into the economy, whether stimulus checks or anything like that. So that increases the money supply. When there's an increase in money supply, that decreases your purchasing power.
I'm not sure how does that happen. If money is coming into my hand, then I'll be spending it.
So when you think of it like supply and demand, when there's a lot of supply, what happens? So let's say you have a store and you sell water bottles, right? And there's not a lot of demand. And in this case, it would be people not going out and spending a lot of money. And that's why they increase the money supply, right? To give people more money. They give stimulus checks and things like that. So in our example that we're talking about with the water bottles in the store and all of that, when there's not a lot of demand, people are not buying your water bottles and you have a ton of supply, what are you going to do?
Okay.
What are you going to do?
Nothing.
You're going to decrease your price, right?
Okay, yes.
So you decrease your price so people can buy more products, right? That's the same exact thing that central banks do. When people start getting conservative with their money, when you're in a recession, when you have to introduce expansionary monetary policies, the central bank will increase money supply. They will look ways to inject money into the economy. They will look for like lowering interest rates, stimulus checks, things like that. And what's the example that we've seen in the UK? The UK government was literally paying 80% of the salaries for the workers. Do you guys remember that? So yes, no.
At the time.
Okay, but the UK government was literally paying 80% of the salaries for the workers while there was a lockdown happening. That was one way to inject money into the economy. It was an indirect way, but that was one way, right? And so when you increase money supply like that, you give people more money, they're going to go out and spend more money. That's how you ramp up economic activity. Eventually, when the central bank and the government itself, they think like, okay, well, the economy is doing well, we don't need to give out more money to the people. That's when you see contractionary policies coming in, and that's when they decrease the money supply. That's when they increase the interest rates, they make borrowing and they make lending and all of that more expensive.
Okay.
Frenchie, did you have a question? I think I saw your mic unmute a couple of times. Are you good?
Yeah.
Okay. All right. Everyone good to move on to the technical analysis now? All right, awesome. So let's take a look at GJ first. So we're going to start off from the yearly time frame. So what you have is that yearly resistance, that minor resistance that we see that price keeps tapping into over and over again. That's about the 152, 300 to 152, 200, 100, any of those levels. It's a range. So I'm going to make that red and we'll call it the yearly resistance. So this is the minor resistance. So when you drop down to lower time frames and you see this line, this 152, 300, this tells us that this is obviously a significant level. That is a minor yearly resistance. And we might see some consolidation happening around here. So we might see price, a lot of volatility basically around this level. And this is where the market's collecting orders in order to push back down for a retracement or anything like that, or finally collect some orders with the help of fundamentals and push above 152, 300 for a bullish run up. What we also have is the all-time low being created all the way down here. $119,500. It could be anywhere from 119 flat to 119,500, but what I was looking at was the candle closes right here. So looking at that specifically, that's the all-time low. What we also have is this entire area of where price created support, finally came back down, made the all-time low right here, filled that wick to the left, and then finally it pushed back up from here. But we keep seeing that on the yearly time frame about 3 more times after price made a support here in 2008, about 3 more times in 2016, 2019, and 2020 as well. We saw that price tapped into this level and then pushed right back up. But if you want to take a look at a specific level, this is exactly where the price is making a support. So you can make that 139.900 or 140 flat, either of those. But this is exactly where the price is creating a support. And as you can see in this little area is where price is consolidating at the moment. So it definitely had a lot of liquidity wicks to the downside. So it seems like price is pretty much getting ready once you have the perfect fundamentals, which would be any positive news coming out of the UK and the yen remains the same, or the yen weakening and the pound remains the same. And any of those is going to help GJ over here break past 152, 300. Once that's broken, your first target for a buy would be this wick fill to the left, and that is that 156, 500. Once that's broken, looking at the yearly time frame, you don't really have anything stopping you from coming all the way up top here. But again, that is another crucial level because once price tapped into 186, 700 back in 2015, 2016 is when Brexit was introduced. And that's where the pound pretty much fell back down. And this year, as you can see, it does not even have a top rejection, which tells you that price didn't even try going bullish at all. So in 2016 is when we came all the way back down and tapped to the same exact liquidity area. So you're going to start off for a position buy opportunity. You're going to start off after a break and retest of 152, 300 or any other confirmations that you would use. Besides that, continuation up, it's going to start off for about 400 pips. And then you would be risk-free at that point. You can look for scaling opportunities. And if you want to ride it all the way up to 186, 700, you could have a trade for potentially 3,000 pips as a position trade. For sells, you would need to break out of this consolidation for a position trade and then flip back down and continue. So as we know that the first zone right here is an important zone. This is where price has tapped into several times, even made a support. So if you're looking for a position trade, this will be your first stop for about 1,000 pips. And then you would need extremely weak fundamentals coming out of the UK for that 2,000 pip move down. If at any point you think I'm going too fast or anything like that, let me know. Or if you have any questions, then just unmute and ask. But even on the quarterly time frame, we see that this is still a very significant level. As you can see, where price has made that resistance right here and then drop back down from there. And then also to the left where you also have this fake out and you have that resistance being made. So this quarter, this is pretty much what we're sitting at, still at this level. Tried to go a little bullish, but came right back down. Also, if you want to take a look at some levels that we have already tested, and in order to look for any sell opportunities, you would need price to break below this level and then continue back down. Maybe your first target being 139,900. And then after that, look for another scaling coming down to 130 flat. And then ultimately 119,500 was the all-time low. So this would be like your position sell opportunity. For a buy, clearly wait for price to continue bullish, break above 152,300, first target being 156,500. Once that's broken, so even in that, you have that wick fill to the left as your first target and then coming up to the zone. But once this level is broken, you're gonna wait for a break and retest and continuation up, with another partial being taken around that 170 area, wait for another break and retest kind of out of this zone right here. Wait for another break and retest with the final TP being at 186,700. Looking at monthly, so let me go ahead and create a zone here as well. So if you look at the monthly specifically in this zone here, what we have is price creating a fake out right above that level, but you also have a massive bottom wick, which price ultimately came back down, filled, and consolidated right into this area before you had another break and retest coming all the way down to that 119,500. The same exact area was, so once you had that bullish run up, you had a pullback. So that was the higher high that price made, pulled back a little bit, and then finally came all the way back up to this 186,700. Same exact area where price consolidated and then melted from that point all the way down to 130 flat. You also have another fake out, and that's the same exact area that price is creating a resistance at right now. So this monthly candle did just start. So I would definitely give it some room to make any top wick rejections or anything like that, and then come back down if you're looking for a sell opportunity. Or if you're looking for a buy opportunity, then at least wait for price to kind of retest down here again and then push back up. So at least made a bottom wick rejection, even if it does not come and fill this previous wick completely, but at least make some bottom wick rejection to continue bullish, and then look for your entry coming up to 156,500 and then 186,700. So this is still position trade right now. Looking at weekly, this zone checks out on the weekly as well. So if you look to the left, again, you have that support being made. You have that little break and retest with that doji and then continuation down, resistance being made. Same thing here, that little bit of consolidation that's happening, and then price tapping into this level again before it pushes up and then melts back down. Also on this week right here, that's exactly where price made a top wick rejection right into that area and then came right back down and melted. So if you look to the left, it checks out there. And if you look at present price action, you'll see something similar happening. You're going to see price. This is where price pushed up and came right back down. You see price kind of struggling to break out of this area. Same thing here. And that's the area that we're in right now. So this is the area that price is failing to break above. You have some sort of consolidation happening here, the market trying to collect orders. And then we want to see, are we going to get the strong fundamentals? Are we going to see UK kind of strengthening, moving closer to May 17th? That's the sentiment that we're going to be seeing when the economy starts to open up. And are we going to have enough momentum to push back up to 156,500? Or are we going to see some more market fear settling in and then finally break below the support that price is making and come back down to that 140 area, 139,900? So that was position trade. Now we're going to talk about swing trade opportunities. So let me go ahead and move that zone. On the daily time frame, what you have is that clear area of sensitivity where price keeps tapping into over and over again. You have this minor consolidation and then a melt back down where price made a support, pushes back up. And then once it passes above 152,300, you see the volume dying down, and then ultimately price coming back down and melting, creating another consolidation for an entire week, pushes back up, taps into that area here again. And that's exactly where we're sitting at right now. So as you can see, price has been failing for about the past 2 days. Price has been failing to break the previous highs. And that's the same thing that we're doing today as well, right? We haven't really came back up and tested into this level. So when we drop down and we try to look for scalp opportunities, we know that if we're looking for any buy opportunities, our max target is going to be that 152,300, maybe a little bit over it, but nothing really above this zone here, right? Because as we can see, that's an area where price is tapping into to simply grab some liquidity. But if we're looking for sells, then we're going to wait for some top wick rejection, continuation down, target the daily support that's being made here. And then as price continues down, then we would target some minor levels, ultimately looking for price to come back and tap into this area for a swing trade opportunity. So that's for the sell. For the buy, I would highly recommend waiting above 152,300 and then continuation up. As we saw on higher time frames, there's pretty much clean traffic once price breaks above 152,300. And so another zone that I would create here would be right into this consolidation, where you see price keeps tapping into. And so we're going to wait until price comes back down. And you have a trade from, you have about 100 pip trade. And then if price were to come back and revisit the lows, then about 168 pip trade. Looking at the 4-hour, that's the same level that price is rejecting at the moment. So you have price that was pushing bullish, came back down right after tapping into that level, did some sort of a retest, and now for the past couple of 4-hour candles, price has been kind of dying down, or the volume has been dying down in price. So there's a very high chance that as soon as we tap into some of these previous resistance and the new support levels, once we tap into these levels, that price could try to come back and then tap into that yearly resistance zone right here. And then that's the key area where we want to watch for. Are we going to look for a sell, or are we going to look for a buy opportunity? If price again fails to break past 152,300, then I do think we're going to come back down and tap into the zone here again. But if price creates a support, pushes into this area, then I would wait for some sort of a break and retest here, and then a continuation up, targeting this consolidation to the left. Makes sense so far? Any questions?
No question from me.
All right, and then remove the zones so it doesn't get confusing. But what we're looking for here is price. You see that little bit of consolidation that happened here. Price melted down after that. So even after a break and retest, coming down for about 80 pips, pushes back up, taps into that area, and we're getting some form of consolidation right here as well. So what we want to see is price going to break past this minor support that it's making. So I would say about 151.55 area. So is price going to break below that? If it does, then you have a nice sell opportunity here again, coming down for about 60 pips or so. And then you have your next important target that you want to watch out for, or important zone. And once price clears that, then there's really nothing stopping it from coming back down and tapping into some of these areas down here, which were also the daily consolidation. So you want to wait until that clear and then continuation down. So price here coming back down for about 60 to 70 pips, and then continuation down with a total trade of about 160 pips. So 2-hour is the lowest that we're going to go. Any questions here on GJ at all before we move on? No questions. Cool. Let's move on to EU. Yes. Yes.
Traders report GJ.
What? I'm sorry, what did you say?
The commitment of traders report.
Let me pull that up after we're done recording the thing, okay?
Okay, okay.
Yeah, I'll pull that up right after. Let me go through the breakdown real quick here. So looking at, if you're trading EU, what you have is another key level that you're currently sitting at. This is the yearly time frame. So this would be around 1.223 area, creating a zone. So, and we're gonna modify this as we drop down to lower time frames. But this is the overall area where we see that price keeps tapping into over and over again. So you have that bottom wick rejection, you have that little fake out, price still creating that support down here, pushes back up with a lot of volume, tapping into these areas here over and over again, and then you have a meltdown for that low that's being created, push back up, right? So clearly this is another sensitive area that price is sitting at right now. So what we want to see is, are we going to have the optimism from the euro where they're talking about right now from a fundamental perspective, they were talking about easing restrictions on businesses and traveling for the fully vaccinated people. And then Germany also coming in and they're trying to ease up restrictions for the people who are fully vaccinated as well. And then we also want to take a look at what's happening with the European Union and China, right? Their political issues, what's going on there. And is that going to bring in optimism for the euro? Is that going to strengthen the euro? So that's the key level that we're sitting at the moment. That was pretty much it from the yearly time frame. We're going to drop down to the quarterly time frame and take a look at what's happening here. So this is that 1.172 area where price made a support. And this quarter, we made a top wick rejection, quite bullish, as you can notice that we don't even have a bottom wick rejection this quarter. So it seems like we're pretty bullish at the moment for EU, but we're still kind of, every time price taps into this area, it struggles to break past it a little bit. So we're looking for some of those key fundamentals at the moment. And then if price were to break back below 1.172 area, then where are we headed next? So the first opportunity is going to be continuation down for about 344 pips, and that is coming down to this resistance that was made. So this is where price was pretty much stuck for quite some time before it finally pushed above it. Right, so this is the first target, and then once it breaks below that, then there's really nothing stopping it from coming back down into these areas here. So we're going to start off with about 300 pips, continuing down for about 700, and then tapping into about 1,000 pips. But for this to happen, you need to see extremely weak news coming out of the euro against the dollar, and then continuation down. So if things worsen, for example, between EU and China, that could be one factor. If as soon as the European Commission eases up the restrictions for the fully vaccinated people, but cases start to increase again and they have to go back into a lockdown, that could be another factor. Obviously, that's not going to cause it to drop back down from like 1.2 coming all the way down to 1.107, but it's going to help it break below some of these key zones and then continue back down as we start to get weaker fundamentals. As we look on the monthly time frame, same thing, pretty key level. Last month, we closed rejecting that top area right there, but still quite bullish. This month, what I would want to see here for any buy opportunities, let me zoom out a little bit here, is first of all, I would identify the first zone. So I think once price breaks above the zone here, this is the next area that we're targeting. And then after that, we're going to continue even higher, tapping into some of these areas here. And the reason why I say that specifically is because if you look right at this level, we see how price kind of reacts here, where you see consolidation, where you see fake outs, where you see wicks happening, right? And then you see support consolidation and then a meltdown right from this area. So that's the next, that would be the ultimate target. But for that to happen, we would obviously need some positive news and then a continuation back up. So this month, what I would like to see is price to respect the previous wick that's being made up top. I want to see how price reacts into this zone. Maybe just create a top wick rejection. And then as it flips bearish, I want to see how price reacts into this specific area. If you look to the left, see how there's a lot of wick outs. So I want to see if price is going to flip bearish here, continue down, look for a trade coming back down to 1.172. And then that is when I would go risk-free and then just let it run as a position trade. On the weekly, we have a pretty basic structure at the moment where price consolidated, pushed bullish, consolidated here again, instead of giving you a nice correction, simply consolidated, pushes back up, and then we had a retracement after that point. We're still making some higher lows and higher highs at the moment. Price pushed back up, rejected that area. So what I want to see is price going to come back and revisit the low here before it continues bullish, or are we going to continue bullish after price makes a support right into these areas? So it could be any of those. Price could simply make a support here, make another higher low, and then continue bullish. So I want to see how does price react to these minor levels as we're dropping down. I want to see how price reacts right into this area specifically. Any questions so far? All right, going into swing trade, you have price pushing bullish, but it was giving you some retest along the way. A lot of scaling opportunities, taps into that same exact area. We see a lot of consolidation, a lot of volatility. Now I want to see price drop back down. Once it breaks below, this is as we drop down to lower time frame. So as you look for more, for example, scalp turned into day trade, turned into swing trade opportunities, you want to wait until price can break below this area, and that's your entry for a swing trade opportunity to the downside for about 100 pips. And then if it comes back down to revisit the low, then about 297, 295, almost 300 pips, depending on your entry, any of that. If you come onto the 4 hour, price pushes back up right into that zone, collected orders, melted back down, and pushed right above this area here again after collecting some more orders. It seems like it's still respecting this previous resistance and the support here. It seems like it's still respecting that, coming back down, breaking the previous 4 hour lows. And so we could look for some nice scalp opportunities. If price can give you a break and retest, at least on the 15-minute to 30-minute time frame, if price can give you a retest right below this area, that would be a very nice scalp opportunity coming back down to about 1.202 area. And then as it continues back down bearish, you could ultimately target this 1.92 area or 1.19 area. Make sense? Any questions?
Makes sense.
All right. And then again, 2 hours, the lowest that we're gonna go. But this is pretty much the area that price is rejecting at the moment. So that was a previous resistance, support, resistance here, and now it seems like we're coming back down, trying to revisit some lows down here. Revisit the lows, and then if it continues back down, then you would just wait for a break and retest and look for another entry to the downside. And that's how you're going to start off as a scalp opportunity turned into a day trade, a swing trade, and then ultimately you can turn that into a position trade as well. So what you want to take a look at is the structure, right? Always focus on the structure. If you're looking at the 2 hour time frame, obviously we broke structure, came back to retest it, and we want to see if we're going to have enough momentum to continue back down, especially into this zone. Any questions on EU before we move on to gold? All right. So what do we have for gold? Looking at the yearly time frame, previous resistance that was made here, 1680 flat. So previous resistance that was made here, we've tapped into it already this year. You'll also have the yearly resistance being formed right up top at about 1900 flat. And also you're sitting at another key level if you look at this wick right here and exactly where price is sitting at right now. To do 1790 or 1800 flat, any of those. But that's pretty much where price is sitting at right now. That's another key level. So right into this area is where I would say it. When you look at the quarterly time frame, this is the same exact area. Excuse me. Okay, so this is the same exact area where price was consolidating for quite some time, still rejecting this area for a lot of quarters, right? 1, 2, 3, 4, 5 quarters, it rejected that area and then melted back down, consolidated here again. This was an entire consolidation and then pushed back up when the geopolitical issues between China and the US started to increase, right? So that was around the 2018, 2019 area, and then definitely highlighted in 2020. We finally broke past that, created some all-time highs. We're the same exact variation of what we did in the past, still rejecting the 1900 area for about 3 quarters in a row, melt back down, and still testing the previous resistance levels of 1680. So right now we're sitting at that crucial level that price kept rejecting in the past. So what I want to see is price going to break above, essentially I would call it like 1800 level? Is it going to break past that? If it does, I think we're going to come back and tap into 1900 area. That would be the ultimate target that I would have, but I would still be interested in seeing, is price going to reject this area by creating top wicks as it did in these past 3 quarters? Or is price going to be able to actually break above and come back and fill the entire top wick? If not, I think we're going to have the same exact thing that we've had in the past where price simply consolidated in this area. So I think we're going to have price simply consolidating in this area until we start to see some more fundamentals coming out, whether that means all the economies opening up again. Those developing countries that need help with vaccines, they're able to get a wider access to vaccines and not seeing so many variants coming out, things like that. And that economic optimism, stronger macro fundamentals is what's going to help gold come back down, maybe even revisit some of these levels here. And then as political issues start to increase again, we're going to see gold increasing as well. When you look on the monthly time frame, pretty clear that we've been in a downtrend. So we've been in a downtrend. Now, if price breaks above 1800, then that's when you're going to see the break of this bearish structure. We're looking for a retest on lower time frames. And then as price continues bullish, this is when we're going to look for that entry coming up to that 1900 area. And then we could probably even let some runners go to see if price is going to come back and tap into this 1960 area where it made a previous monthly resistance. So that's what we want to take a look at. Or is this simply like a fake out, and is this candle going to flip bearish? If it does, then the target for us is going to be that 1680. When you look on the weekly time frame, you can see that even in the past, it was a very significant level. This is a significant zone at the moment. This is also where price was in a downtrend. So price was pretty much in a downtrend here. It just broke the structure, broke out of it, did some sort of a retest. I want to see if price is going to continue bullish. If it does, then I would look for a buy opportunity as it passes up the previous high that it made here. I would look for a buy opportunity there, keep stop losses either right at the zone or right below the zone, and then look for a target at 1900. And then if you also look on the weekly time frame at this 1900 level, you can see that there was a ton of consolidation that happened in the zone, right? So this is where the market collected orders, pushed back down, tapped into that crucial level that we've seen, pushed back up, grabbed the liquidity from there again, and then finally had the momentum to continue pushing down to tap into 1680. So we have some crucial levels that price is approaching. It's in one right now, but if it breaks past that, then the next crucial level is going to be 1900 flat. That's for position trade. Looking at swing trade opportunities, you have market collecting orders as it's done that in the past around the same exact area. So market collecting orders, I want to see market break or the price breaking above 1800 flat. Once that happens, let's see here. Once that happens, the next area that I would target would be up top here, which would be, let's just do 1830. Would be this 1830 level, which was a strong support level until we finally broke below it. Once that's broken, then you have some more minor levels coming up. So you have a ton of scaling opportunities, ton of swing trade opportunities along the way here, 1680, and then ultimately 1900 flat. And then if it breaks above that, then obviously these resistance levels are what we're going to be looking at. But if price fails to break above 1800, if it just remains in this area, consolidates, and then continues back down, then I would look for sell opportunities as price breaks below these wicks here. So as you can see to the left, as price breaks below these wicks, I would say 1760, 1765, any of that. If it breaks below that, then I would look for a sell opportunity coming back down into this next little consolidation phase that it went through. And then after that, another scaling opportunity coming back down to 1680. Once this is cleared out, there's nothing stopping it from coming back down to 1680. 4 hour, we already see that fake out at this level here again, above 1790. So if you're looking for scalp opportunities, let me go ahead and remove this and we can narrow it down now. But if you're looking for scalp opportunities, then you don't want to take any scalps right into this area. You want to wait until price clears below this, continues down, and then you have some nice scalp opportunities. You could even target here once that's cleared out. Next target coming back down into this area here. And then after that, this entire wick fill. 2 hour, you have that little retest, continuation down. So now just wait until you can get a better opportunity. So you're going to look on the 30-minute, 15-minute, even on the 2 hour time frame. Make sure you're using higher time frame confirmation along with the lower time frame confirmation. You're going to wait for some sort of a retest here and then continuation down. So this 4 hour candle and 2 hour candle closes in 20 minutes. Obviously, you wouldn't look for a trade right now, but as London opens up, or if you trade New York or Asian or whatever it may be, wait for that retest and then continuation down and look for those entries. Any questions at all about any of the trades that we went over?
Nope, not for me.
All right, awesome.